Scott Bauer, the CEO of Prosper Trading Academy, to get ahead of some of the closely watched reports. Scott, good morning to you. Thanks for joining us.
Morning.
And at risk of jumping the gun and getting a little bit ahead of ourselves on this one, aside from the geopolitical unease, the focus this week for traders, currency traders, that is, will be the jobs report on Friday. I'd imagine they want to see, well, something that's going to echo the comments that we heard from Fed Chair Jerome Powell Friday in the minutes, and basically see real strength in the labor market. It's been the pillar of strength for this economy.
Absolutely, and it's a pretty light week economically leading up to that. So, obviously the focus will be on what's happening in the Mideast and geopolitical tensions. But once we get towards the end of the week, Ben, all eyes will be focused on that. And, was it a one-off what we saw last month, or is this a sustained, sort of situation now? And that will have a major impact on the dollar, which has been holding really, really steady here just above that 96 level.
Yeah, Scott, I'd imagine that some of the focus, you mentioned how kind of light in terms of economic data, but one of those data points is going to be the ISM non-manufacturing index after the manufacturing data Friday here in the U.S. A bit of a miss. I saw the ISM PMI at 47.2 versus 49. Prior was 48.1. Does this mean that we'll see some increased focus, attention directed towards the manufacturing data, the ISM non-manufacturing data tomorrow?
Yeah, no doubt about it, and that has been a weak spot in over the last couple months. That manufacturing data sub 50 there, in contraction, and on the opposite side of that, Ben, not just here in the States but overseas here. If you look at Europe, theirs is the same way here, sub 50 contraction, though their services PMI out in the UK actually came out right at 50, little bit of a bright light, but no doubt there will be a focus on the manufacturing sector here.
Yeah, it seems like the services sector has been the real strong one relative to some of the others, and we're still kind of leaning on that and continue to hope that that will be the case. Let's talk a little bit about how we saw, reflection of this from Yellen and Draghi commenting this weekend on how monetary policy has a meaningful role to play. They said it's unlikely to be sufficient in the years ahead, though. Yellen said it should not be the only game in town. I mean, it sounds to me like they're hinting towards the need for some sort of fiscal stimulus.
I agree with that, and I think that right now the underneath what we all see in the media, the Fed has to be thinking that, especially with what's going on in the Middle East, we're going to do anything we can to support the economy, to support the dollar. So I agree with that there's probably some plans out there for stimulus, but I don't think anybody wants to rock the boat either, to take the other side of that.
Yeah, I agree with the anything we can. It sure seems to be the Fed's position at this point. Let's talk about how Yellen said in terms of anything we can. She said we can afford to increase federal spending and cut taxes. Scott, it always amazes me how, to the point, some of these Fed officials are once they leave their position and are no longer in the spotlight. They can really say it. They just talk from the heart, it seems like.
You literally just took the words right out of my mouth. I'm wondering if she would have said this, 18 months ago, 24 months ago, when she was in that position. I doubt you would have heard those words.
Let's talk about the move up in crude combined with optimism tied to the USMCA. That's actually giving the Canadian dollar a nice bid. It's interesting to see these two products kind of tick a little more closely in line than they have been over the last couple of years. A bit of a disconnect recently, but much more in line with maybe different contributing factors, but nonetheless, end result being both pointed north.
Absolutely. The Canadian dollar, along with some of the other currencies like the Russian ruble, they are so closely correlated with oil, and obviously the spike up, for whatever reason it may be, has helped underpin that rise a little bit here.
Scott, in addition to that, we're seeing that flight to quality activity in the Swiss franc and the yen. I mean, assuming we have continued tensions, weakness in the indices, this should be expected to continue, correct?
No doubt about it. I mean, the yen eclipsed 108 today, and I'm not saying it's going to 110 or anything like that, but there should be a bid underneath there. Same with the Swiss franc. And on the opposite side of that, Ben, you have some currencies that are counter to that, like the New Zealand dollar, the Aussie dollar, which are much weaker because of what's going on.
Yeah. Scott, let's talk a little bit about how this flight to quality trade, it appears rapidly, right? I mean, the news hits the wire, all of a sudden the markets react suddenly, but this actually plays out at a rapid rate, almost exponentially faster than it develops as that flight to quality type price activity unwinds, as we get some sort of a easing of tensions. I'm wondering, I don't necessarily see that on the horizons for this one, but obviously something for us to be focused on. You can't have tunnel vision and only focused on the rally and the flight to quality, because at a certain point that starts to unwind as well.
Yeah, no doubt about it. But that's one of the psychological inherent natures of trade, regarding whether you're talking about currency, whether you're talking about equities, whatever that space is. When there's some volatility and there's a reason for caution, what you see is that fear, that spike up. So that flight to quality does happen much quicker than the easing, than when it starts to unwind. However, this one should be lasting a bit. I mean, I hate to say that because of the conflict in the Middle East, but it certainly doesn't look like it's going away anytime soon.
All right, a lot going on here, Scott, and certainly, and I'm glad you point to the human aspect associated with markets. We sometimes lose sight of that, and how really they're just a reflection of our opinions and our thoughts and our feelings. Scott Bauer joining us this morning to talk currency. Scott, appreciate it. He's the CEO of Trading Academy.